On All About Stocks this week, the Nifty down 3.5%. We'll tell you if this is the correction and the opportunity that you were waiting for to buy select stocks. Ambareesh Baliga tells you why you should be investing in Himat Singh for the long term. And Ambareesh has also made a profit of 58.5% in his portfolio, beating the Nifty by 25%. We'll tell you how he did it and how you can make similar returns. Welcome to All About Stocks. Thank you so much for tuning in. This is a show meant for long-term retail investors, and we've had a very interesting week in the market. It could be that correction or that opportunity that we were waiting for to get into the market. If you've been standing on the sidelines feeling like you missed the bus, we're going to find out, or try and find out, how much longer this correction is going to last, or how much longer the opportunity or the window of opportunity is going to exist for you. And if you're going to take it up, what should you be buying in this market right now? What sectors and stocks you should focus on? We'll also answer all of the questions you sent in during the week. Remember, our email ID is at the bottom of the screen. If you have any questions at all about buying stocks or investing in our stock market, write to us. It'll be our pleasure to answer your questions on the show. Now, it was a rough week for the markets. In fact, the Wall Street witnessed its worst 5-day loss since July last year. The Sensex and the Nifty were hurt by heavy capital outflows thanks to weak global cues and, of course, a sort of nervous domestic sentiment ahead of some macro numbers that we were expecting. The Sensex ended the week at 27,350. The Nifty couldn't hold on to 8,300. It closed below 8,250. That's a cut of over 3.5%. The rupee also hit a fresh 10-month low. Joining us today to make sense of all of that information, Ambareesh Baliga is an independent market analyst. He's been advising us with our stocks now for several years. Ambareesh, thank you so much for joining us again. We've been talking about the fact, and every guest who's been on the show has said that sentiment has been great since the new government took over in May, but everybody's been waiting for a correction. Is this that correction that will bring us back in line with corporate numbers? Or do you think this is just a week-long thing?
I just hope so, because you really can't have a bull run without a meaningful correction, and especially if you're talking of a multi-year bull run, it can't be a straight line. And these corrections can be about 10 to 15%, but in the last 9-10 months, the correction which we saw was extremely small. The largest correction which we saw was closer to about 5% when the markets fell below 7,800 levels. And we were thinking that possibly it could go to 7,400, but then we had a very spirited bounce back, and then we saw new highs. But I just hope that this is that correction which will allow the investors who had missed out to get in at lower levels.
You know, it's interesting you mentioned the last time, because I remember we had questions from investors who thought the last opportunity was the opportunity.
Right.
And before they even made a move, it bounced back again.
Yes.
So how do we read this on Monday morning when the market does open? How do we know whether we're going to get 2 days or we're going to get 3 days? Or would you recommend we keep our list ready and our online portal ready, and on Monday morning, depending on what the opening is, we just go out and buy?
No, we should have a list ready. But should you buy on Monday morning? I don't think so. Because 80,250, 8,300, this band was an extremely good support, which has been broken. Now, in case we see that Monday also is quite weak, there's very much possible that you'll have the next band opening up, which is a 400, 500 point band. So I suppose one needs to be a bit careful, because the sort of news flows which has just started coming in aren't too positive, especially if you're looking at the international flows. So I think one should wait for a while, and I don't think one should be in a hurry to pick up at this point of time. Year-end considerations are there. You could have some more of FI selling coming in, because we should remember that they have made stupendous profits in the last 9-10 months. So possibly they could book out. So I think, people should be a bit careful at this point of time.
Let's also talk about crude. A lot of the optimism over the last couple of weeks was because of the price of crude. What is your call on crude going forward?
So the crude will remain weak, because when we're talking of the demand scenario, it's again been revised down. So you may not really have a huge bounce back in crude. Like from these levels, it's possible that we could see slightly lower levels and then we could have a bounce back. But the way things are, I don't see the crude going beyond $70. At least for the next 12 months, 9 to 12 months. So I think overall we can assume that the crude will remain weak, and that is good news for India, no doubt.
All right. Very interesting comment coming in from the RBI governor this week, when he said that it's not the regulator's job to boost the Sensex or to boost the market. What are you reading into that? Are we still expecting a rate cut in the beginning of the new year, or do you think that now we should possibly temper our expectations a little bit?
No, we could have a rate cut. May not be beginning of the year, may not be a New Year gift, but I think it could happen just after the budget, like in the March policy, because clearly the governor needs to be sure that the inflation is on the way down, because for which I think he has to see the December and January inflation numbers, because that is when the base effect will start kicking in, and in case the inflation numbers are benign at that point of time, I think that would be a signal for him to reduce rates. And even if he reduces rates, I don't think it will be a huge, rate reduction. I think it will be about 25 basis points to start off with.
So, Ambareesh, tell me this, if we do see further weakening in our markets over the next 1 week, if what you talked about, the fact that FIIs are going to want to take some money back home, if that does play out, what stocks should we focus on? Because this is obviously a market for careful picking.
Right.
How should we pick those stocks?
No, I think it has to be across the spectrum. Clearly from a bounce back angle, I think one needs to look at those sectors or stocks which have done very well in the past 8-9 months. I would talk about pharma, IT, FMCG, banks to a certain extent. I think those are the sectors and stocks to be picked up from a short to medium term perspective, also long term perspective, no doubt. But at the same time, I think one should also start looking at contrarian bets, which basically are the India building story. Because if you're talking of India growing at 8%, 9% in the next 3-4 years, you really can't have India growing at that rate without infrastructure, power and capital goods. And these are the sectors which have not really performed, especially power and infra.
Yeah, power sector still doesn't seem completely out of the woods yet.
Yes,
so
yes.
Would you say, now is the time, or should we wait a little while longer till we see some more, positive policy announcements in the sector?
No, I think one can start buying at this point of time, because when you have a positive policy announcement, you will not get it at these levels. Just to draw a corollary, the OMCs were great buys about 18 months back, but nothing was happening. It was a great contrarian buy, and I had given a buy call in HPCL at that point of time at 170. But once you started having positive news flows, you couldn't catch it at 200, you couldn't catch it at 225. It went straight to about 300, 350.
Give me your main pick in the power sector, if we will. NTPC.
And again, here there is no issue with the balance sheet. They have enough cash, and this could be the right time for them to buy out those power plants which are in distress. They'll get it at extremely cheap valuations, and again, you really can't go wrong with the largest thermal power company in India.
All right. You do have Infosys in your portfolio, for
Right.
example. It's done 100% since
Yes.
you bought it, which is fantastic.
But at the same time, I also have Wipro, which hasn't done anything much.
Which is going to bring me to my next question. If you're talking about IT and pharma at this point, should we be waiting for stocks like Infosys and TCS, or should we look at the next, the next list right now?
No, you should surely have stocks like Infosys and TCS in your portfolio, and then possibly you should look at the second, third rank stocks. In the second rank stocks, possibly something like a Mindtree could be there. Could be there in the portfolio, because again, this company has performed extremely well over the last close to 6-8 quarters.
ITC also in the FMCG, is that what you're
Absolutely. That's again another stock which hasn't really performed too well if you're talking of the last year and a half as compared to HUL. But in the last 1.5 months, it has started performing. And despite the sort of issues which are there with cigarettes, this company has actually diversified very well. And if you're talking of the next 4-5 years, dependence on cigarettes will be much, much lower than what it is right now. Yes. And rest of the diversification projects which they have taken up in the last 10 to 15 years will start actually delivering.
There's Ambareesh Baliga's picks. They're on your screen right now. If you have any questions about them, feel free to get in touch with us. Let's take a few questions right now. Gardi has written in, 40 shares of Bharti Airtel bought at 260 rupees. Should I hold on to that stock? What would you recommend?
Bharti Airtel, again, if you're talking of the next 6 months to a year, I'm not too bullish. I'm not bullish on Bharti Airtel as well as the other telecom stocks. First of all, because the spectrum pricing could be a bit steep. And at the same time, once you have the Reliance Jio launch, you'll have like margin pressures on the existing players. And we have seen that happening in 2003 when Reliance Industries at that point of time had launched the Reliance communication. Yes. So at these levels, I think she can actually book out to a certain extent or fully and wait for lower levels.
If she books out at a certain extent, would you recommend she waits for lower levels on Bharti Airtel or pick one of the stocks you mentioned some time ago?
I think she should pick up some of the stocks which we have in the portfolio and also what I'm recommending now.
All right. That portfolio is in fact coming up a little later on the show, but I quickly want to take another question, and I know a lot of you hold this stock. Raju has 250 shares of RIL, which he bought at 833 rupees. Should he continue to hold the stock at 882 where it ended the week? Of course, if he is a long-term investor and he's planning on holding RIL for the next 5 years or so, there's plenty to be hoped for, isn't there?
Yeah, absolutely. So I think if you're talking of long-term over the next, beyond the next 6 months to a year, I think he should just hold on to the stock, because if you're looking at the last fortnight or so, this stock has corrected decently well. So I don't think it can fall much more from here, possibly in the 50-75 rupees more from here. But then if you're looking at the next 4-5 years, you don't really bother about 50-75 rupees sort of a movement.
All right. In fact, we've asked Ambareesh to give us one recommendation for this week, and he's been kind enough to pick a stock that he believes we should be buying at these levels. And he's brought us Himat Singh. Now, it ended the week at 89 rupees. Now, this is a textile business. It's had stellar numbers, really, in the last couple of quarters, and it's been constantly pleasantly surprising the market with its numbers. It has operations in India and a retail network across 22 countries, a market cap of 884 crore rupees. FII holding has come up, interestingly, quite sharply on this company in this last 1 year. And the numbers were impressive. Tell us why this one makes your list at this point in terms of why you've picked textiles, and among the textile stocks that are available, why this one?
See, this is like a niche segment of home textiles, in that it's basically drapery, upholstery, bed linen, and that too silk, where the margins are quite high. And in fact, this is a completely integrated sort of a company: design, manufacturing, distribution, and brands. And the brands are those top brands in US and Europe. And that's where the margins are huge. And this company went through very troubled times between 2008 and 2012. But then after that, it has bounced back extremely well. And again, in addition to Europe and US, like you rightly said, they have their operations in nearly 22 countries. Operations in the sense, they distribute in those 22 countries. So overall, if you're talking of the next couple of years, I see this company growing at about 28-30% sort of a growth rate. And at the current levels, it looks extremely cheap, because for FY16, I have a EPS target of about 13 rupees. And just giving it 12 times PE, it should quote at about 156, which is about 50-60% from where it is right now.
All right, so that's the recommendation that Ambareesh has brought us this week. That's Himat Singh ka said. That's on your screen right now. If you have a question for Ambareesh about that recommendation, feel free to get in touch with us. Welcome back. You're watching All About Stocks in ET now. Ambareesh Baliga is still with us, helping us figure out a strategy for our long-term portfolios. Now, Ambareesh designed a portfolio for us on this show on the 4th of January this year. That portfolio is currently at an overall gain of a little over 58%. Now, the Nifty over the same period is up 33%. So, Ambareesh, you have beaten the Nifty quite handsomely, but I'm going to take our viewers through the stocks in this portfolio. There's United Spirits, ICICI Bank, L&T, which has been Ambareesh's pet stock for a very, very long time. That's up 50% since we bought it. Z Entertainment, Alembic Pharmaceuticals is up 100%. Pidilite, Lupin, Wipro, which is down 3%. Infosys, Bajaj Finance, Ipca Labs, Motherson Sumi. So, Ambareesh, it's an interesting portfolio, because a lot of the stocks that you've been bullish on, and I remember we talked about each of them when you picked them, have actually performed in the manner that you predicted, except for a couple, Ipca Labs and Wipro. What is your call on Wipro right now? Do you want to hold on to it and
Wipro, I'll not hold on to, since Infosys is there and it's been performing. Wipro, again, has been a poor performer, even, if you look at the financial results also. Not really kept in pace with TCS and Infosys. So I think at these levels, I'll possibly exit, utilize the money for something else, like which I mentioned, Himat Singh and NTPC.
All right, I want to ask you this question. For all of our viewers who are watching at home right now, who possibly have Wipro in their portfolios, should they be exiting as well?
Depends. If it's a small holding, I would say possibly exit and buy into Infosys, because I think you should have a IT stock in your portfolio.
Well, let's also talk about United Spirits. We still have a 15% positive upside on this stock from where we bought it. But Are you as bullish? I remember when you picked it up, you were very bullish about what United Spirits might be able to achieve, which it really hasn't been able to give us in terms of returns. Right. Would you like to hold on to it even further?
I will not hold on at these levels. I mean, especially after the sort of news flows which have come, the sort of skeletons which are there. I mean, I never really expected so many skeletons in United Spirits when I had bought it. Since that cleanup has happened, no doubt, but I think, I mean, that effect will be felt over the next, couple of years, if not the next 2 to 3 years. So I think the upside for United Spirits would be limited. So I won't like to hold on at the current level.
All right. And so you're exiting Wipro, United Spirits, and we're getting into the two stocks that you mentioned earlier on the show, which is Himat Singh and NTPC. Ipca Labs is also the only other stock that's down in your portfolio. But you have confidence that it will turn around?
I have confidence on Ipca Labs because I see a bounce back in performance in FY16. I mean, the current year would be bad, but FY16 I see a bounce back, because of which I'll possibly hold on.
All right. I also want to go back now, because this is a model portfolio for anybody watching at home, to go back to the advice you gave us in the beginning of the show. If we do see a further cut in the market over the next couple of weeks, which of these stocks would you add to?
I would possibly buy some more in Infosys. Ipca Labs, again, I may add more because, I mean, since it has not performed and I expect a performance in FY16, because of which I'll possibly add a bit more of Ipca Labs.
All right. So if there is a further cut in the market and you're holding either Infosys or Ipca Labs, it makes sense to add those two stocks to your portfolio. Now I'm going to give you a recap of the stocks as they stand after the changes in Ambareesh's portfolio. Now there's NTPC, ICICI Bank, L&T, Z Entertainment, Alembic Pharma, Pidilite, Lupin, Himat Singh, Infosys, Bajaj Finance, Ipca Labs, and Motherson Sumi. Again, if you have questions for Ambareesh about that portfolio, feel free to get in touch with us on the email ID at the bottom of your screen. Ambareesh has promised to come back to the studio on a regular basis to review the portfolio and the rest of his calls. Let's take a few more questions. Sukhjeet has written in. He has 70 shares of Dish TV, which he bought at 68 rupees. Should he hold on to that stock? Should he hold on to Dish TV?
I think I should just hold on because the best is yet to come. They've been adding subscribers, but that's not getting reflected currently in the financial performance. But I suppose that would happen in the next year or so. So I think you should just hold on.
All right. Since we were talking also about infrastructure, I want to bring up this question. Sujit George has 156 shares of Ambuja Cements, which he bought at 169 rupees. Should he hold on to it? Now, he's already made a decent profit, but you know, we do have a government right now that's so positive about infrastructure, so positive about housing and construction. What will it mean for all of the cement companies, and particularly Ambuja Cement?
Infrastructure requires cement, and there's no way your demand for cement can remain where it is. It has to boom. But the question is whether it will happen in the next 3 months or next 6 months. I suppose it has to happen sooner than later. And if you're talking of the cement stocks, I mean, you had the mid-caps moving, but Ambuja hasn't really moved much in the last 1 year. But being a large-cap stock, being a leader, I see this stock performing if you're talking of the next 1 or 2 years.
All right, so hold on to Ambuja. Let's take another question. Prerna has written in 50 shares of Maruti Suzuki, which she bought at 1,665. Should I hold on to that stock? So she's made a nice profit on Maruti Suzuki. The only thing that might give her a little bit of nervousness was that the management did come out and say, see, the worst is not over. We are going to have a rough couple of months for auto going forward. But if she's a long-term investor, as you know, her question would suggest, should she worry about Maruti Suzuki?
She shouldn't worry. Okay. And I mean, in fact, I had worried about Maruti when it was about 1600 levels because of the corporate governance issues at that point of time, and that was a mistake possibly which I did by exiting Maruti at that point of time. But again, looking at I mean, the future, the next couple of years, and the sort of demand which is there for the Maruti vehicles, I think she should just hold on. It's a great investment. Well,
Vijay Haran has written in. Now, he has 100 shares of Engineers India, which he bought at 144 rupees. Should he hold on to that stock? Engineers India has had a fairly good year.
Right.
Would you recommend he holds on to it even further?
Just hold on to it because, again, if you look at the order flows last year, they were not, I mean, they were not too great. But going ahead, I expect the order flows to improve quite a lot. And because of which this stock could again go back to those levels of 450, 500, which we had seen a couple of years back. So I think at the current levels, you should just hold on.
Avnish has written in, he has 300 shares of DLF, which he bought at 150 rupees. Should he hold on to that stock? Now, DLF has had its fair share of trouble right now, and he's obviously holding on to it, hoping that something will turn around. There'll be some sort of good news. What would you recommend he does?
I think it should exit at the current levels. Although, I mean, if you're talking of the fair value for DLF, it's about 165, 170. But then we should remember that the stock had gone down to levels of about 100. From there, it gave a very spirited bounce back. Now, I don't think, looking at the way the markets are, it will hold on at these levels. It's very much possible that he could see levels of about 125, 130. So at the current levels, I think he should just exit. I don't think he'll make a loss at the current levels. So
if we look at the real estate space altogether right now, Ambareesh, they're not all bad eggs. There are some companies with better books right now that he can look at. So if he's exiting DLF at this point and he were to want to stay in the space, what would you recommend?
If he wants to remain in the space, he could possibly look at a Shobha, which is Bangalore based, or he could look at Oberoi's, which is Bombay based. I think both these companies have extremely good balance sheets and the best, the best in that lot.
All right. And also, focus on Bangalore right now would be stronger because it's a stronger market in general. Welcome back. You're watching All About Stocks in ET Now. Ambareesh Baliga is still with us. Well, Rajendra has written in. Now, he tells us he's worried about certain stocks in his portfolio and he'd like us to take a look at it. And if we look at his portfolio, there doesn't seem to be too much to worry about at all. For example, right on top, 200 shares of Bharat Forge, which he bought at 293 rupees, and that stock ended the week over 900 rupees. So obviously hold on to that stock.
Absolutely, because this has been a three-bagger for him and there's nothing to worry. I mean, when you're looking at the performance of Bharat Forge and the expectations in the next couple of years, I don't think there's anything to worry about the stock.
155 shares of BHEL bought at 385 rupees. Now, this stock was recently upgraded by Citibank. What's your call on BHEL?
It seems that he must have bought it a couple of years back because 385 was quite some time back. I would suggest that he should possibly average out in case we see levels of closer to about 200, 210. In this downtrend which you're talking of, because if you're talking of the next 4-5 years, like the power sector has to boom, like we discussed, and if that sector booms, BHEL can't be too far behind.
All right, let's also take a look at his next stock. He has Boltas, which he bought at 100 rupees. That stock ended the week at 260. It has now become the #1 AC player in the business. So
yes.
Don't worry about it again.
Absolutely, because if you look at the performance of the last 3 quarters, it's a clear turnaround case. So I don't think there's anything much to worry about.
Also on his list, 90 shares of Avan Offshore, which he bought at 475 rupees. The quarterly numbers were quite impressive. But should the price of crude cause him some nervousness here?
Here, possibly he has to worry a bit, looking at the way the oil prices are, and because of which the sort of margins on exploration could in fact come down. I mean, the sort of earnings which they have could possibly get affected. So I would possibly say that at these levels he should book out.
All right, book out of that. And last stock on his list is HUL, which he bought at 462 rupees. Hold on to this stock.
HUL, I think, yeah, you should just hold on. Although, there are question marks on the sort of a growth in terms of volumes, and I would prefer ITC. But then I wouldn't suggest him to exit HUL at this point of time.
All right, so hold on to that stock as well. Now, if you'd like us to take a look at your portfolio, write into us. Email ID is on your screen right now. Ambareesh, thank you so much for spending time with us this weekend. It's been an absolute pleasure to have you here in the studio. Keep sending in your stock questions. You'll find a copy of the show on our Facebook page, and you can reach me personally on Twitter. Thanks for watching.